everyone, welcome to another video of Accountancy for You. So today we'll be continuing with the questions. Yesterday we were doing a few questions from inventory turnover ratio today, so we'll be continuing it. But instead of doing the questions directly on computing the inventory turnover ratio, well, I've done a few questions, actually all the questions in the textbook based on calculation of opening and closing inventory. So they're really easy, and once you get the hang of it, you can easily solve those type of questions. You just have to remember the formula. So today, I'll be taking you through question 93, 94, 95, and 96 from our textbook of T.S. Graval's Accountancy of Financial Statements for grade 12. So, let's get started. Alright, what does question 93 say? From the following information, so they've given us a list of information, and from that you have to pick out the necessary information to find the value of opening inventory. Alright, so not this time they've not asked us to find the ratio, but we have to find the opening inventory. Right, so closing inventory is given to us. This is closing, sorry. So closing inventory is given to us 68,000. Then we have the total sales value. Total sales value has been given to us as 4,80,000, including cash sales. Now that's not really important. Like, even though they say including cash sales, well, it's understandable. Total sales, of course, it does include cash and credit sales, right? And then we have total purchases, 3,60,000, including the credit purchases. And that's also understandable. When they say total purchases, it does include cash and credit. Even if they say net sales or net purchases, it does include cash and credit sales, right? Then goods are sold at a profit of 25% on cost, right? So remember, so we have that GP, our gross profit, or our profit, is 25%, that is 25 by 100, on cost. That is, cost is CGS. So in other words, we know that GP is equal to CGS into 1 by 4. 25 by 100, well, you see, 25 by 100 is equal to 1 by 4. So this GP, which is given to us as 25 by 100, is actually equal to 1 by 4. So 1 by 4 of CGS, or our cost that we had to incur on the goods sold, was the GP, or the profit. Now in 11th grade, remember how we learned that if GP is 1 by 4 on cost, or if GP has been given as a fraction or a part of cost price, then it can be converted to a part of selling price as well. That is by just adding the numerator to the denominator, right? So if it is 1 by 4 on cost, it is equal to 4 plus 1, that is 5. So 1 by 5 on sales. However, if it were 1 by 4 on sales, it would be taken as 1 by 3 on cost. So when we make when we make GP a part of cost price to selling price, we add the numerator to the denominator. However, if it's given as a part of selling price and we want to convert it into the cost price, we deduct or subtract the numerator from the denominator. Alright, but the numerator remains the same, of course. So now we got this, right? 1 by 5 sales is our profit. We don't know what the profit is, we don't know what the opening inventory is, and we do not know what our CGS is. So, right, so it's 1 by 5 on sales. Now we got the sales. We know that sales is 4,80,000. So, GP, or profit, is equal to 1 by 5, 4,80,000. 1 by 5 into 4,80,000, which when we calculate is 96,000. Now we know that CGS, or cost price, is equal to sales minus GP. Sales minus our profit, selling price minus profit. So that's what we do next. CGS, or cost of goods sold, is equal to our sales, net sales. Now here again, they haven't mentioned the sales to be net sales, but then we take it to be net sales because no extra or additional information is given about any excluded sales that was not included in this amount, or any sales returns, right? So we can take it to be the net sales amount because there's no other information given regarding it. And then we know that GP is 96,000. So deduct GP from net sales and we get our CGS, 3,84,000, right? So this is directly really important. We need to find CGS if it's not given, because in inventory turnover ratio it's a huge component, right? Next, we know that closing inventory is 68,000 and we need to find opening inventory. Remember how CGS is actually equal to our opening stock or opening inventory plus our net purchases plus our direct expenses minus our closing inventory. We discussed this in the previous video. So it's opening stock, which is not given to us, so I took that as X. We can just keep it as opening stock or take it as X. Either ways works. Then we have net purchases, or the total purchases in this case, to be 3,60,000. Again, total purchases is taken to be net purchases here in this case, because no extra information is given regarding it. Then direct expenses is 0. No direct expenses have been shown, so we take it to be 0, minus our closing inventory given to 68,000. So 3,84,000 is equal to, when we solve this, we get our opening inventory to be 92,000. And that's the answer for the question. Right, so I hope that's clear. Now we move on to the next question, question 94. It says that from the following information, determine opening and closing inventories. Inventory turnover ratio, which is CGS by average inventories, is equal to 5. Total sales is 2 lakhs. Gross profit ratio, no, this is not just the gross profit. It is the gross profit ratio, and that is 25%. Closing inventory is more by 4,000 rupees than the opening inventory. Right, so I've solved this one as well. I've solved all the questions from this section. So inventory turnover ratio is equal to CGS by average inventory, as I mentioned earlier. That is equal to 5. Right, now average inventory is also the opening inventory plus closing inventory by 2. They've given us that total sales is equal to 2 lakh. Now, what exactly is gross profit ratio? It's actually coming much further in the chapter, but I'll just give you a gist of what it is. The ratio, GPR or gross profit ratio, is equal to our gross profit or net sales, gross profit or GP by our net sales, right, into 100. Net sales, which is cash sales plus credit sales minus sales returns. So GP by net sales into 100 is our GPR. So GP is not given to us. We have the GPR 25 and net sales. Again here, no extra information has been given to us about sales except that the total sales is 2 lakh. So we assume there to be no excluded information or no sales returns, and thus we take it to be net sales. So this implies GP is equal to cross multiplying, right? GP is equal to 25 into net sales, which is 2 lakh, so 25 into 2 lakh by 100. So we get GP to be 50,000. Now we know, as I mentioned earlier, CGS is equal to sales minus GP. Sales 2 lakh minus GP 50,000, 1,50,000. Right, so 1,50,000. Right, so CGS is equal to 1,50,000. Now implementing or substituting this information in our inventory turnover ratio. So now here we know that 5 inventory turnover ratio, which is 5 times, is equal to our CGS 1,50,000 by our opening and closing inventory by 2, right? So let's go into what they've given us to be the opening and closing inventory. Right, now it has been indirectly stated to us that closing inventory is more by 4,000 than the opening inventory. So they both are related in a manner, right? They've told us that this closing inventory is more than opening inventory by 4,000. So if we take opening inventory here to be X, then closing inventory will be X plus 4,000. So 4,000 more than opening inventory, 4,000 plus X. So 4,000 plus X, closing inventory, plus X, opening inventory by 2 is our average inventory. Right? I'll repeat that once again. They've said that, well, opening inventory, let's say it's X, okay? And closing inventory is equal to 4,000 more than X when something's more than something else. Like say if opening inventory were say 2, okay, and or 2,000, right? If it were 2,000 and if closing inventory were 4,000 more than opening inventory, then this would automatically mean that it's 4,000 more than 2,000. So 6,000 would be the closing inventory. Coming back to our question, taking opening inventory to be X because we don't have that value, 4,000 plus X by 2 is the average inventory. Now we got this, so now we just cross multiply the two. So 1,50,000 by 5 is equal to 4,000 plus 2x, x plus x is 2x by 2. So 30,000, 1,50,000 by 5 is 30,000 is equal to 2,000 by x. So x, or our opening inventory, is equal to 28,000. If opening inventory is 28,000, closing inventory would be 28,000 plus 4,000, which is equal to 32,000, and that's the answer for this question. Right. So moving on to the next question, question 95. It says that inventory turnover ratio is 5 times. Again, inventory turnover ratio CGS by opening plus closing inventory or stock by 2, and that's given to us to be 5 times. If that's 5 times, and CGS, cost of revenue from operation, is 18,90,000. Calculate opening inventory and closing inventory if inventory at the end is 2.5 times more than that in the beginning. Right, so here I'd like to mention another point. The questions can be worded really differently, but it might seem similar at the same time. So first we know that the first case that we did was in the last question, the previous question, where closing inventory is given to be more by a certain amount than the opening inventory, or where opening inventory is given to be a certain amount more than more by the closing inventory. So like in the previous question, it was written that closing inventory is more by 4,000 than the opening inventory, or it could be that opening inventory is more by a certain amount than the closing inventory, right? So in that situation, we just simply add the two. The second situation is where they say that, right, so if they could say that opening inventory or closing inventory is more than the other by a certain amount. So when they say that though, it actually means that there is, right, so if it says that closing inventory, for example, say closing inventory was 2 times more than the opening inventory. So here it's 2 times, it's not 2 more than or 2 more, it's 2 times more than, right? So what we do is closing inventory is equal to 2 times the opening inventory plus the opening inventory. Or they could simply say it was closing inventory was 2 times opening inventory. Then we do nothing but just multiply the opening inventory amount by 2. So if they say it was more than or more by, then we just simply add. If they say more by a certain amount, we simply add it. If they say it's X times of opening inventory, if closing inventory is X times opening inventory, or 2 times opening inventory, for example, then we just simply multiply the opening inventory with 2. But the third situation comes in, which is a bit more complicated. It says that it's 2 times more than opening inventory, X times more than opening inventory. So it means opening inventory into 2, or the number of times specified, plus opening inventory again. So these are the 3 different cases that we have to be careful of. So in this question, however, they've said that inventory at the end, that is closing inventory, is 2.5 times more than that in the beginning. So 2.5 of opening inventory plus opening inventory is equal to closing inventory. Or in other words, opening inventory plus 2.5 times of it gives us closing inventory. So let's start with the answer. Right, they've given us inventory turnover ratio 5 times. which is equal to CGS by average inventory. CGS is given as 1890. So, and we know that closing inventory, as I mentioned, is 2.5 times X. Say X is opening inventory. So 2.5 opening inventory plus opening inventory. Right, so average inventory is 2.5x plus X, which is closing stock, plus X, that is opening stock, by 2. This gives us 4.5x by 2. Substituting this value in our ratio, we get that 5 is equal to 18,90,000 by 4.5x by 2. So either you could directly start with substituting the values in this, right? Or you could do it separately. Separately find out average inventory and then substitute it. Both ways work. And then we know, so cross multiplying this, we get 4.5 by 2x. 4.5x by 2 is equal to 18,90,000 by 5, which is equal to 3,78,000. Solving this, upon solving this, we get that x is equal to, 42,000 into 4, which means x, or our opening stock, is equal to 1,68,000. Now we know closing stock is our opening stock plus 2.5 times opening stock, so 1,68,000 plus 2.5, 1,68,000, which is 5,88,000. So I hope that answer is clear for everyone. If you guys have any doubt regarding the concepts covered in this video, don't hesitate to mention it in the comment section below. Right, moving on to the next question, 96. 3 lakhs is the cost of revenue from operations, or CGS. Inventory turnover ratio is 8 times. Inventory in the beginning is 2 times more than that of the inventory at the end. Calculate the value of opening and closing inventories. Till now, they used to say that closing stock or closing inventory was something more than, or 2 times more than that of the opening stock. Here it's the other way, right? So we have to be really careful when reading the questions, because it says that opening stock is 2 times closing stock plus closing stock. That's what they mean by 2 times more than. If it was just 2 times closing stock, none of this would be there. It would just be 2 times closing stock. But now that they say it's 2 times more than 2 times more than closing stock, we multiply 2 times closing stock, right? We multiply closing stock with 2 and add it to the closing stock amount. But here we don't have closing stock either. So we take it to be X, or you could take it to be closing stock itself, right? Anything that's easy while calculating. So inventory turnover ratio is 8, which is CGS by average inventory. CGS by average inventory is equal to 8. So we know CGS is given to us 3 lakh. Through this we can find that average inventory is equal to 3 lakh by 8, which is 37,500. So 37,500 is actually opening stock plus closing stock by 2. This means that opening and closing stock is equal to 75,000, right? So when it's 75,000, now we know we substitute both the values. Opening stock is taken to be 2x plus x. Closing stock is taken to be x. So this is equal to 75,000. This 2x plus x is equal to 4x. So 4x is equal to 75,000. This implies x is equal to 75,000 by 4, which is 18,750. So opening stock is then equal to, we just substitute 18,750 here. And we get 2 into 18,750 plus 18,750, which is 56,250. Right. So I hope that all these questions that we discussed in today's video are crystal clear for you guys. And don't forget to like, share, and subscribe if you like the video. And ask any doubts you have regarding this section, or any section as a matter of fact, in the comment section. Thank you, and see you in the next video of Accountancy for You.